Hello guys, what is happening? Welcome to this live stream. So what a week we have had. We have just had absolutely insane moves in the debt market. We've had absolutely insane moves in the equity markets. And we've also had the insane moves by central banks and the massive amount of volatility that we've had within currencies, major currencies. And in this live stream, we're going to be going through, hopefully, if we have time, a couple of things that you can do to protect yourself against these certain currencies that look like they are collapsing. We've just had the Bank of England essentially come out and choose a crack-up boom over actually reining in inflation. So what does that mean? And in the short term, it may look as though the pound has rebounded slightly, but remember that volatility, like we are seeing within the pound, is just not normal up or down. I was chatting to my girlfriend yesterday and I said, you know what? If this move in the pound was like going up at much smaller increments, I would be happy about that because it would show a sign of strength. But when it is going down massively, up massively, down massively, that is still equally not a good sign. And after the Bank of England came out and said, we're going to start doing our quantitative easing, we're going to start buying bonds, we're going to become the lender of last resort in this government debt market. What happened yesterday? Again, UK gilts were spiking upwards. Now, they weren't going upwards with the same momentum, but this just shows you the power of the bond market. And what I would like to say is when it comes to like the Bank of England, the Bank of Japan, and the European Central Bank, they are all about central planning. They believe that they can central plan their way out of anything. And I feel like the Fed and the Bank of Canada, at least at this point, they acknowledge and know that they are just all about psychology. And a lot of people don't understand that when people say that. How is a central bank all about psychology? Well, when they raise rates, it's just the effect of raising rates. It has an effect on stocks, but really does it have that much of an effect on the bond market? It's more of a psychological effect that happens, which causes investors to then impulse and sell those bonds. So that causes the yields to rise and you get into the situations that we've had recently where the bond market is sort of imploding in certain cases. Now, it's really, really interesting to me what is happening because the global economy seems to be going into a financial crisis right now. But it's not all areas, and that's what's really strange. It's only the countries and the currencies that have loose monetary policy and are essentially their governments are doing massive deficit spending. So has the psychology around investing in different currencies changed? Well, these charts might tell you something that they have. So right here, what this is a chart of is basically the pound versus gold. So basically, or gold versus the pound, should I say. So basically what you can see here is that the gold is actually rising since the start of this year. So what's interesting is it's up at its highs right now. Gold is up at its highs, which is really, really interesting. You've got like a double, triple top there, which isn't normally a good sign, but it's very, very interesting that gold is still up here. And what I want to show you is if we measure, so we are September 30th around then. So if we measure right now from last year, September 30th, so that is around here. Gotta find it. October, around here. So if we measure from around here to where we are right now, that is around 16.6% that gold has risen in a year to this day. And to the highs, it's actually risen 22%. So why is that important? Well, the thing is, when a currency goes bad, The most important thing to monitor is what is happening to gold prices versus that currency. Now, we're in slightly a unique situation because the dollar is strong, and that is also affecting gold prices, and it's putting headwinds on gold, which would like you would have seen a way more dramatic move in gold against the pound if the dollar wasn't so strong. But what's interesting is you're up, and you were at a high just last week of 22% when the currency was at its peak decline, and it's since rallied quite a bit off those lows, and it may go all the way back and test the 2020 waterfall price, which was around 114, 115, I think, because after it broke that price again, it was like a waterfall. So market volatility is still really, really high. But what is interesting is when you look at the pound versus gold, it's up 22%. So what do I mean by this? Well, this basically shows that people in the UK have lost 22% of their purchasing power at a minimum, at an absolute minimum. Now, the thing is, when you think about the CPI and how the governments come out with their consumer price index and they say this is inflation and you should accept inflation being at that because we are the central planners and we know everything. Well, it's not true. And, you know, it's very interesting because speaking to people back in the UK, family back in the UK, they feel as though their home prices have risen and are continually rising because of articles that have come out like this one, which I'm going to show you right now. And this is really, really interesting because I want to show you how the media is spinning it over there, because this is going to happen in Canada. It's going to happen in New Zealand. It's going to happen in Australia. So we have to look at what's going on in the UK as a opportunity to see what is going to happen to us further down the road in order to prepare properly for it. Now, I've always been a massive person who has always said that you have to have gold to insure your money. Gold is the insurance on your money. In my opinion, you need at least 15% of your net worth in gold, and that is just the insurance policy against your money failing, as we're seeing here. Like in 1 year, the price going to 20%, it was near the highs last week. Your gold, when that currency is failing like it was last Friday and it was down 3.6%, gold was at the high. So this is what I think Brent Johnson means when he says eventually we're going to see the dollar index rising and gold rising at the same time. And I think why that's going to happen is because a lot of these currencies are going to be failing or getting to the point where they are failing, which is pushing a lot of money into gold because the flows always go to the same place. It was the same in Weimar. It was the same in Venezuela. It always goes to gold. Gold has zero counterparty risk. And I want to show you this article because basically this only recently came out, and it's from Mansion Global, whoever the hell they are. But basically, I couldn't find the mainstream articles. They probably deleted it by now. But this was all over the press in the UK about how home prices were up before this mini budget, which was essentially the snowflake that started the avalanche, because you basically were already in a massive decline in the pound. It wasn't just this budget. The budget was just kind of the trigger event that broke the dam essentially. But all the mainstream were talking about this. Now they're talking about home price declines because the mortgage industry is in massive amounts of trouble there. They've had a record amount of mortgage products pulled off the markets. Lenders don't even know how to price interest rates. Interest rates have gone through the roof, and that's because the debt market has collapsed so much and is now requiring such a high compensation for things like mortgages. And what does this do to pension guys, by the way? What does this do if you're on fixed income like a pension? You're just roadkill. You're absolutely roadkill. This is why it's so important, in my opinion, to have gold as insurance. Gold is not an asset that is going to rocket up and it's going to be your get rich quick scheme. That's not the idea of gold. Gold is your insurance policy against your net worth. So if the government does do what the Bank of England has done, then you have your insurance policy in place against that. And as I've said before, do not store it at home, store it someplace safe. Don't store it at home, because as gold values rise, inevitably burglaries targeting gold and safes and everything like that will also rise. So anyway, what they're saying here is home prices surged 15.5% in July. Okay, this is nominal price increases. The data which reflects deals struck during the spring likely misses the rising interest rates and inflation home buyers now face. And it also says September 14th, 2022, that was released, showing you that it was only a few weeks ago that the mainstream was touting about home prices, how they were up and everything like that. So why is this interesting? Because a lot of people in England, they still believe that their house is worth more when it's actually worth less. Like let's imagine that we are in the US. Let's imagine that we've got US dollars. Well, if we're going to England now to buy a house, our purchasing power has increased 20% over the pound. So the fact that nominal prices in the UK are up 15.5%, it makes no difference. It makes no difference. Same if you had gold and you were buying real estate in England, it would be the same thing. So the prices they've actually gone down 4.5%. And now with the debt market collapse that has happened, you're going to see the real prices fall even harder and even nominal prices start falling, because housing and real estate is a leveraged product. It would be a very different scenario if it wasn't as leveraged as it is. And part of the proponent of it being so leveraged is the financial carnage that causes when they start to go south, like we're going to eventually see in Canada, New Zealand, Australia, the banking crises that are just knocking at the door right now. I mean, even the Canadian dollar has been tanking over the past couple of weeks. Nobody's talking about that. You don't see that on the mainstream press. And the same thing has happened with the New Zealand dollar, the same thing with the Aussie dollar too. But that's not everything. And this is what I want to show you before we end this real quick, is that basically it is not just like they are telling you that it's all about this rising dollar. Because let me show you this. We're going to go USD Mexican. So this is US dollar versus the Mexican peso. Oh, look at that, guys. Look at that. The US dollar has been going down all year against the Mexican peso. Why is that? And I think this reflects the changing psychology of the market, that now people want real rates and they're bailing out of currencies that aren't giving it them. Mexico is one of the currencies that will give you a real rate of interest. The CPI there is running at around, I think it's around 8.7%, and they've got interest rates now that are at 9.25%. So there you go. So you've got a small real rate of return. Look at Canada. They're at 3.25% or whatever it is. The CPI is running at 8%. That is a massive negative real return. And the fact is, these central banks cannot get it to a real rate. And this is what I'm trying to tell you guys. We are at the failure. This is why I put on the thumbnail that the end is near, or whatever I did, because we are getting to the point where these major currencies are failing, and the other currencies that they can push interest rates up on the people because they're not as leveraged, they are actually getting better returns, as in their currency is actually doing better against things like the US dollar. So it's not just a story of a strong US dollar, is it? Because Mexico does equal amount of trade with the US as Canada probably does. Canada is its biggest partner, but Mexico is a massive amount of trade as well. So this is huge. It's really, really huge, and it marks a change in psychology, in my opinion. So anyway, I'll be back on Sunday. There's a video that I've got that I actually edited on Tuesday that I'm putting out for you about all this and the history of what is going on. And I hope that you managed to see that video, because it will really, I think, open your eyes in terms of what is to actually come here. So anyway, thank you so much for watching. If you've enjoyed, please like it. Have a phenomenal weekend.